more big tech earnings out. Amazon sliding in the pre-market today after failing to deliver on Q3 revenue and then forecasting a weak fourth quarter. Amazon echoing other retailers in its call, citing macroeconomic conditions, including inflation and rising interest rates. But of course, e-commerce is really just one part of this business. Cloud, of course, a major consideration when you break down anything Amazon related, because that's where most of the margins come from. Advertising, they're continuing to build out that business, have a high conversion rate, which is what marketers, even in a pullback of advertising spends, would look for, is more of that high conversion and purchase intent from some of the even top of funnel people that they might be advertising to.
Yeah, two points on this one. I think first is a knock on Amazon, because I think they came here 3 months ago and said, you know, we're going to start slowing our spending. And I think the street thought this was going to be the quarter where margins would expand, they would pull back billions of dollars in costs and just really drive a better operating model. They did not do this year. And then secondarily on the conference call, really warning, I think, for the first time about a consumer spending slowdown. Not new in the grand scheme of things, given everything we've heard from other companies this earnings season. But to hear it from Amazon before the holiday season, it definitely sets a different tone.
It does set a different tone, with them saying that their holiday sales could rise 2 to 8%, which would be the slowest in the company's history. Still growth. That's what they're expecting, at least. And then on the AWS side, the fact that the AWS results came out lighter than estimates, $20.5 billion versus the $21 billion estimate, the slowest growth since we learned about AWS revenue as a separate unit. So those are really the two big things that analysts are focusing on here. And it seems like, to your point, Saz, that the cost cutting is going to be a multi-quarter process, right? And that's something I think we should keep in mind, because we're hearing from a lot of companies. Intel, for example, which we're going to talk about later, which cut and now is cutting more and is going to be cutting more, right? So that's not the only company. We've heard from a number of companies who gave us initial indications about, say, a freeze in hiring. Then it becomes, we're pulling back investment in some areas, right? So you have this sort of cutting creep, if you will, as things start to deteriorate a little bit more on the demand side.
Almost like a triage of cost-cutting mechanisms that they start to implement here. And that also is as they're tracking what their operating income is doing and how it's decreasing. Operating income actually decreased to $2.5 billion in this third quarter. You compare that to last year's third quarter, $4.9 billion in operating income. And so the decreases in operating income largely affects as well where else they can reinvest some of those dollars back into the business too.
Absolutely.